In the meantime, the big news, of course, is the fact that, mutual funds are looking at expanding their footprint. And this is something that that's been a chatter for a while right now, whether or not the minimum investment into SIPs or mutual funds is actually going to be brought down. We've heard the regulator as well talk about this. And yes, the SEBI proposal paper does indicate that they have proposed small ticket SIPs to expand retail participation. And who better than Feroze Azeez himself to throw light on exactly this. Feroze, hi, good morning. Good to have you in the studios. We've chatted about this earlier, that 250 rupee SIP, but in a market sentiment like this, tell me what could be the repercussions. Are we going to see a gush of DIR money if SIPs become 250 minimum? And will we really see the category that perhaps the regulator is trying to target come to equity markets?
Very valid questions, Aisha. I think we've discussed this in the past as well. I personally think if history's got some indications of how people behave when minimum tickets have been tampered with, right? I personally think it does not create a huge excitement initially. How this works is, first the regulator gives you a go-ahead, 250 ki kar lo. Then what happens is AMCs follow suit. AMCs start trying to calibrate their margins with respect to smaller tickets. Then you, as a great stakeholder in the financialization of India, start speaking about it. People pick up that whole thing, and then that percolates down. So it's a good 2-year process.
Yeah.
But this is a seed sown. Of course, it's not like a bargat ka ped which will take 100 years to grow. But this is some chiku plant which will give you fruits in another couple of years. Right? That's what I've just bought a farmland. That's why I've gotten there. That's where the analogy comes from.
It doesn't How long does it take?
Yeah, I also didn't know till the last time I saw a plant at the plot I've bought. So coming back to the moving away from
So an equity guy is moving to real estate?
Not to real estate, just to move my parents from Mysore to Mumbai. They said, unless there's enough greenery, I'm not moving.
Okay, so coming back to 250 SIPs.
Right. So I'm very excited about the seed being planted, point one. Point two, if you look at our 26,000 crores of SIP number, unfortunately, AMFI doesn't dissect this in terms of size. I do a sample test knowing the asset management companies where they're friends to try and see how much money is the 90-10 ratio works here. This 26,000 crores is not coming from retail. The number of people giving the retail, the quantity is coming from retail in terms of numbers. The values are coming from 1 lakh rupee SIPs. I've been getting a sample test, just like an exit poll, right? You can speak to somebody in the asset management company. He gives you a dissection. And that's what my extrapolation says. 90% of this money is coming from 10% of the folios, which is a great news. That's how any business is designed. So will the numbers in terms of value go up? The answer is no.
Just volume.
Volume will go up. Volume creates awareness and creates good for the financialization of the country. Why is that very important? If you are all Indians and we're proud to be, India is made of people and land, right? So we'll be very concerned about people in India. You would see that 34 lakh crores was saved last year. You'd be saddened to know only 92% went into debt. How much finance?
Still, in today's day,
7% in mutual fund, 1.18% in direct equity. When we do shows, right, we say 60% equity, 40% debt.
Right.
But India's last year's savings is 8% equity, 92% debt. Inflation कम होने का नाम नहीं ले रहा. India debt से move नहीं हो रहा. Then still banks are cribbing that money is going into equity. 43% went into deposits. चाहते क्या हो? लोग उधार लेके आपको उधार दें. 43% went into deposits. And those guys are cribbing 7%. How can it go into mutual fund? 18% went into insurance in the name of investments. Such an oxymoron. It went into insurance in the name of investments.
Yeah.
And still people frown upon retail का पैसा यहाँ आ रहा है इसलिए market भाग रही है.
But then, will this 250 ticket size actually bring players into the market or not, given the math that the money is actually moving into fixed income assets?
It will completely depend on the 3 women I'm sharing the studio with. How much prachar they will do of this concept, and I'm very confident you will be one of the most responsible channels, and that's what attracts me to be on this every time you call upon me.
But believe, Feroze, the kind of excitement that everybody now has with respect to the markets, and especially we are seeing that retail boom happening. But for now, we are not seeing that many of these AMCs are offering that 500 sort of an SIP that we do have. There's not much excitement about it. If we taper it down to 250, how these AMCs and the mutual funds going to take it?
I think there is a sense of a herd mentality in this business, and I can give you enough. I can give you 10 data points to prove this mathematically, not by perception. Okay, if there are 43 AMCs, if the top 3 guys are going to do it, or the bottom 3 guys are going to do it, the top 3 will copy. The great part is, we are, in this industry, the top 3 are reasonably responsible players. SBI is a very responsible player, not running after profits. It's very clear. I know the joint CEO very well. And he says, on your show, he said, the last time I was hearing him as a panelist, he says that I am not worried about 5 years of gestation period to make money. It's my duty as an SBI asset management company to penetrate the financialization of this country and remove the unstructured savings like chit funds out of this country. Sure. Wherever it deserves merit, it will be on. So am I very positive that people will follow suit? Because now the regulator has pushed it. Some of them will do. I'm sure SBI will be very excited to do it, and 90% odds, because I don't run SBI, so I can say 90% odds. If that were to happen, HDFC and ICICI will follow suit. If these 3 do, then it'll over a period of time, people will. And when you look at NFOs, one guy creates an index, capital market index, the rest of them actually make NFOs on that same index.
Yeah. So following with this, do you see this providing a sustainable or a substantial fillip to equity markets going ahead? Even if it takes 2 years as a gestation period to take place?
Yes, it will.
Yes.
See, the whole 50,000 SIP mark per month just expedite itself by 6 months by this move. We were projecting this will happen in 2028 or 27. Now you are reasonably sure that March 27 you will see 50,000 crores per month.
Substantial.
Well, certainly, Feroze, but let's also talk about the kind of retail participation that we are having right now, because given the fact how the equity markets are performing and there's so much of volatility that is kicking in, the kind of growth that we are seeing in terms of the SIP inflows per month is definitely tapering it down with the kind of growth numbers as per se we have seen in the past 2 or 3 years. Given this volatility, do you believe there's some risk of redemptions happening? I know this is off that 250 odd topic, but just on the current scenario, what's your sense?
See, I think the more the retail the business is, lesser will it be impacted by market. Let's visualize. There's somebody who has put 250 rupees for 10 months and put 2,500 rupees. We are looking at 1% correction. 25 rupees से उनका portfolio घट गया. Do you think it will really perturb him? It won't perturb him. वो chocolate खाता है 25 रुपए की. Do you understand? As the volumes, now that's a problem. Volatility is a problem for a business like mine, which is focusing on an HNI. 100 करोड़ डाल रखे एक दिन में 1.5 करोड़ कम हो गई. और उनको ऐप भी दे रखा है लोगों ने. मैंने नहीं दिया. खोल के देखेगा 1.5 करोड़ कम हो गया. उस दिन की नींद हराम. So the retail, the business, more the academic, the volatility. So I'm very happy that this volatility will be absorbed very easily from retail unless there is catastrophic fall. That's point one. Second, I personally think we as responsible stakeholders, you have always spoken of volatility in mathematics. You would be proud to know, and I was very proud to know, so I should share with each person who's watching your channel, that your volatility, Nifty is your barometer, popular barometer in the country. Yeah. S&P 500 is the world's most popular barometer, 50% of world's market cap. Isn't that? Correct. From 22nd March 2020, you can note an Excel sheet. If you put S&P 500 and Nifty has thrown up a lesser volatility.
Oh, really?
Okay, isn't that surprising?
That is surprising.
Perception-wise, India is a volatile market. On Excel sheet, what do you mean by volatility? Calculating standard deviations. Take daily values which are available on the internet. Daily values of Nifty. Put this. Why did this happen? Because of SEBI. We all have SEBI to thank, and we don't be grateful enough to the Lord and then SEBI, of course. They brought in a circular which limited short selling on 22nd March 2020, a day before lockdown. And that circular is still in effect. So India mein koi FII उठ के suddenly he can't short the market saying that चलो 20,000 करोड़ की short कर दो. नहीं कर सकता वो. एक रिटेल बंदा 3 लाख से ज्यादा के पुट नहीं खरीद सकता 21,350 के कल के आज के 3 लाख के नहीं खरीद सकता that because that maxes out the 500 crore limit. And the greatest news, and why am I highlighting something as trivial or as old as 3 years, 4 years back? From 1st of April, this circular is going to become more stringent, and this will be checked on an intraday basis. Now this circular is checked on a closing basis. If a person can understand this, he will say that Indian markets are a very investor friendly market and a very bad speculator market.
That's
But tell
exactly
me, those people that you just talked about who have the apps in their hand, the HNI fraternity, is there panic setting in? What are the kind of frantic calls that you're getting right now looking at this market?
No, however rich the person is, if he's got 500 crores, I don't give him online access. Okay, if you want to deal with me, I'll only give you a report on 31st Jan. Okay, that's a mandate. That's why you would see Anand Rathi clients behave very differently in FY21. HNI removed 1,25,000 crores from mutual fund, 1,25,000 crores for PMS. Anand Rathi clients added some small 150 crores, so they didn't sell. Because when you give an app, the guy is not going to open it on a normal day. He'll open it every time there is minus 4%.
Okay. So, but do you sense some redemption happening looking at this market?
No, not as yet. So we track this on a daily basis. I will prompt myself on your show and say, please take me on the show when I see that reversal. Because that can change overnight.
Yeah, exactly.
Right? So we're checking that on a daily basis before Amphi gets that information. We have algorithms written there. If I see that trend reversal, I will prompt you.
Please
to come
raise
and
the
highlight
red
it for our
flag.
dear viewers.
Should you do that? But, you know, if someone were to come to you afresh right now with a pool of cash that they're sitting on, looking at this market and across asset classes as well and across market cap categories, what's a good portfolio mix?
15% in small cap, not more than that. And the small caps also not through a PMS platform. People are gone bonkers on PMS. PMSs take far more concentrated bets. So I would say if you're using mutual fund as a platform, which is a reasonable low risk platform, 15% in mid cap, about 30%, 25% in small cap 15%, mid cap 25%, and 60% large cap. Looking at the current earnings will be a great mix. And from an asset allocation standpoint, this is the time where long-term money should be 80% equity.
80%.
If you can close your eyes on equity movement for even a year, this allocation will not disappoint you. If you're sitting on December 31st,
No gold.
See, if you have debt in your portfolio, see, I don't have debt in my portfolio. Please replace, if you have more than 30% debt and zero gold, you're not doing justice to your money. If you have 30% gold, 1/3 of that, 30% of debt, 1/3 of gold minimum. If you have 40% of debt, don't have 40% of debt, have 20% debt and 20% gold. This will be a better mix for you to protect yourself and still get some inflation beating returns.
Okay, great having you on the show as always. Thanks for your time.
Thank you.
If you like this video, then like, share and subscribe to ET Now.